What's going on, traders? How we doing? Yes, you made it to the SPACs attack. I am here in the office. I'm going to be bringing on Chris, but we have a great show for you. A lot of headlines to get through. We're going to get through our watch list. We're going to talk some SPAC life. Yesterday's moves, Rice, SFTW, TDAC had big moves yesterday. We'll see how they're doing today. And we got an interview. Of course, we're going to get to Benson Hill, CEO, Matt Crisp, and the company going public with Star Peak Corp 2. So STPC. Stay tuned, guys, and welcome to the SPACs attack. You out there, that's what the show's all about. It's about you guys out there getting informed to be SPAC traders. Let's go ahead, bring on the one and only, the Chris Opedia. What's going on, man?
What's going on? I mean, first off, can we just take a moment for everyone to smash that like? Mitch is in the office, downtown Detroit, and he's looking good in that suit. I mean, I know that we give a lot of flack to the so-called suits, but when you can clean up like that, I mean, I think that deserves a like and a subscribe here. What do you think, Mitch?
Well, it looks like the chat is calling me a little Trump red here, but I wouldn't say Trump red. I would say good looking suit here. But at the end of the day, what I want to do is look like what my name is. And if I'm Money Mitch, I got to look like money, right? I can't walk into the office in a gym shorts and a t-shirt and then we call myself Money Mitch. So, hey, happy to be here. Happy to have this show. And I mean, look, guys, I'm in the Benzinga office here. I can't believe it, guys. Finally taking over here. I'm excited to get into today's show. We got a great interview, so I know I want to get through some headlines. And Chris, I don't know what I'm gonna have to do, but I might have to drive out and come pick you up because we might have to bring you in here and we do a little side by side show.
Yeah. We might have to do that this week. So stay tuned, everyone. Make sure you're watching videos this week because maybe you could see Mitch and I both in the office.
Hey, there's only one way. I'm looking forward to getting towards our interview. Benson Hill has been one that we've been trying to get on for a while. Like Solar said, hey, this is what it's all about. Solar up. I'm happy you're excited to see the interview. And let's go ahead. Let's knock out some headlines so that we can get into that. And like always, Chris, bring us on back to this.
All right. Yeah. So starting with headlines today, up first, we have Danimer Scientific. That's ticker DNMR. The company out with news. They received a grant from the United Soybean Board to expand the research of soybean oil and biodegradable plastic production. Remember, Danimer Scientific, one of the plastic, the sustainability companies that did go public via SPAC. So keep an eye out, Danimer Scientific, with that news. Another SPAC to watch here on news with a company related is we have Bark, BARK, parent company of BarkBox. So Petco, a leader in the pet industry, they announced the expansion of the Pup Box with personalized boxes for all dogs across all life stages. So that Pup Box monthly subscription is going to offer boxes for puppies, young pups, grown pups, and senior pups designed for a dog's specific needs at each stage of their life. I like this play here by Petco, but I worry a little bit about how this may impact BarkBox, as a competitor to their product. So have to keep an eye out on Bark today to see how it performs, given that news. We do have some analyst ratings to get to. So we have ChargePoint, CHPT, Bank of America launching coverage with a neutral rating. So they talk about strong electric vehicle penetration, but they're cautious due to the supply chain challenges. So they have a $26 price target. And, again, they sound rather bullish in the note, but that neutral rating and a $26 price target. So keep an eye out, ChargePoint. We've seen this one get a decent amount of analyst activity, but getting the neutral rating today, definitely not doing shares any favors. It looks like shares trading down today on that news, down about 5%. So again, keep an eye out on ChargePoint. On this analyst note, another analyst note out there, we have Maps, parent of Weed Maps. Canaccord Genuity initiates coverage with a buy rating and a price target of $21. I continue to like Maps, right, as a thing behind the thing. They're a cannabis play that de-SPAC'd, and getting a nice analyst note here on Maps. Then we have PaySafe, PSFE. So I know that's a favorite of the chats here. So PaySafe out with news. They expanded the Betfred USA Sports partnership. The terms were not disclosed, but expanded partnership with Betfred, which is the US subsidiary of Betfred Group. And they're building on an existing payments relationship. So again, remember, PaySafe is all about payments, digital wallets. So they're going to help Betfred, especially with its Iowa online sportsbook and credit and debit card payment processing. So keep an eye out. PaySafe does have strong relationships in the sports betting market, but definitely room for expansion there. So PaySafe, it's looking decent here. Then we have Evolve, EVLV. So Evolve Technology shares were trading higher. They did announce a new LLC called Give Evolve, which is offering need-based, free-of-charge donations of Evolve weapons screening systems to schools to offer a safer learning environment free from gun violence. So we had an interview with Evolve, not too long ago. Of course, they have those screening devices used at arenas, sports venues, also Disney. They also had talked about getting into, schools, but obviously there's a cost with that. And they launched this LLC to help bring those devices into schools, free of charge. So keep an eye out on this one. It could get some positive press out of this too. So I would be curious to see, how Evolve reacts to this.
Yeah, excellent news here. I think, we specifically talked with the CEO about this
Yep.
solution, and I think it's something that, yeah, we have COVID and we've been so worried about the pandemic, but I think, if we take a step before the pandemic, this was a major pressing issue, right? Gun violence in schools and how we wanted to take that away. I think in the long run, you're going to see a solution come from the government to try to help get these technologies and not just some schools and some districts, but in all districts. And I think this needs to happen. So I'm happy to hear this. And Evolve, I am pushing for you on this because I know, like a lot of people out there, we want to feel that our kids are safe in school, send them to school and not worry about gun violence. This is one of the major things to definitely keep us going in the right direction.
Yeah, definitely. And Mitch, you're right. When he was on, we did talk to them about, would they get into schools more, right? Right now the big focus on arenas, but I really like that news out there from the company. Then we do have several SPAC names, as the top mentioned on Wall Street Bets. So have to highlight those real quick. We have Clover Health, CLOV, IronNet, IRNT, Rocket Labs, RKLB, and Microvast, MVST. Anytime these names pop up, as the top mentioned name on Wall Street Bets, they can see, increased interest and talks of valuation and share float. So just be careful and pay attention to some of these names. Then Lucid, we did get Lucid Group news today, LCID. They announced the cashless redemption of their public warrants. It wasn't, to be unexpected here. LCID, again, hitting that threshold for the share price that now they can call those warrants. So keep an eye out, LCID, to see how shares react to that news. Then we did get earnings this morning from Genius Sports, GENI. It's been a favorite of Mitch and I's on the show. Again, the thing behind the thing for sports betting. So revenue of $55.8 million in the second quarter beat a street estimate of $53.8 million. That total was up 108% year over year. So $40.7 million for their betting technology, content, and services segment, $7.2 million for sports technology and services, and $8 million for the media tech, content, and services segment. They reported in that earnings that they increased their market share. I think that was very important to see them say they increased their market share, right? As we talk about some rivals like Sport Radar, they had new customer wins and they saw a higher share of wallet. They also discussed several acquisitions that they made. And then, of course, the big news, they tightened their guidance. So previous range of 250 to 260 million for the full year for revenue, they now see 255 million to 260 million. And since the end of the second quarter, they've been on a tear, right, with customer wins. So they announced partnerships with DraftKings, Caesars Entertainment, and WinBet. So some big deals for NFL data, and many of those also include access to their English Premier League and NASCAR data. So locking in these customers, for additional data and content deals. And then turning to the calendar, we do have a couple items this week. So we have a vote for SFTW with Black Sky. We have a vote of RICE with their merger with Area Energy and Archaea Energy, and Quell, QELL, their merger vote with Lilium, and Glio setting a merger vote date of September 28th with Shapeways. So I will note that today is the redemption deadline for shares of QELL. So pay attention to see how that one trades. It could have heavy redemption at current levels. Mitch, anything standing out to you? I know we probably want to, talk Genie, but what about the Petco and the BarkBox news? How big of an impact do you think that's going to have on BarkBox? I didn't even know that Petco really had this monthly subscription plan, and now the fact that they're tiering it, I really like that in Petco's eyes. Not so much in BarkBox's eyes.
Yeah, what I'd say about that is that I was actually talking about Petco this morning, and one of the things that I think they did well is they started transitioning to being not only kind of a storefront, right? Is something more of an e-commerce move also when they started partnering with, let's say, DoorDash, where you can get the same day delivery. I think this was a massive move for the company. Not only did that give them an advantage that now that you can get the product sent to your house in the same day, is that it also gave them the advantage of they can look at things like this. Now they're able to go ahead and step into an area where they weren't, maybe capitalizing on, but now can take that attempt. And another thing is that what's the competitive advantage to Chewy is usually going to be a couple dollars because it's a e-commerce selling. And so you can look at Bark now. Bark is just getting stepped on here because a bigger player is actually stepping into something that they were mastering. So we'll see how this kind of keeps evolving, and this Petco starts using their own toys like Bark does. I think that's another big part of why Bark makes the margins that it does, is that they make their own. I think these are the kind of things you need to look at to compare the two companies, but definitely a big step up for Petco, and maybe Bark needs to start worrying about their competition a little bit more.
Yeah, completely agree there. Mitch, before we get into this exciting interview with Benson Hill, if we can go Genie real quick, obviously we've highlighted this for several weeks, for several months. Revenue up 108%. They beat a street estimate. They also tightened that range, right, for the full year guidance. I think there were some people surprised that they didn't raise guidance, and I think that's why we saw shares down 5% initially today. In my eyes, I think they're being conservative here. What do you take from that guidance just being tightened and not raised after signing these additional deals?
Well, one of the things is I think this company is fighting also on two sides of the battle, right? Where they're fighting on the growth battle, and they're also fighting on kind of the money that they need to spend, right, to keep growing, and what acquisitions they need to make to keep them at this growth pace. I think you're seeing their numbers definitely match. I do like this comment here about kind of how they recently announced that NFL agreements and how this really validated their strategy. I think they definitely know what they're going after, which is going after the leagues first and then
Yep.
going after the partnerships with the sports betting books, right? I think that was a massive move that they made by landing the NFL, and it was worth every single kind of penny that they went after that.
Yeah, definitely. You saw that they signed those deals with Caesars and WinBet yesterday. Of course, DraftKings before that. Happy Mohammed mentioned in the chat that now they just need FanDuel, the last of the 3 NFL betting partners that has not signed a deal with Genius Sports. I mean, we're one day away from the NFL season, Mitch. Do you think FanDuel tries to hold out here on not getting the official data? I think that might slow them down, versus competitors, as they're not going to be able to offer certain live betting odds without that deal.
Yeah, I think it's just a matter of the clock ticking, and you'll see it probably happen later on in the week, if not next week. I think they're trying to put the pressure on here and being like, "Oh, we don't need it," but at the same time, they're like, "Yo, can we get that? Can we get that deal?"
Right? Well, and they're last to sign. Maybe they don't get a good price anymore. Maybe Genius held out and said, "Hey, should have came to us earlier when DraftKings did." And maybe DraftKings got a steal by signing on the dotted line first. But we'll have to take a look at the watch list later on. But Mitch, I know we've got an exciting interview to get to today. What do you think? Should we kick it off here?
Yes, let's do what we do best. Let's go ahead and unlock some SPACs and get into our interview. Up next, we got Benson Hill. Stick around, guys. Hit the thumbs up. Let him know. Let Matt Crisp know exactly that you guys are happy that he's here on SPACs Attack.
All right, guys, super excited, as Mitch just said, joining us on SPACs Attack, exclusive interview with Benson Hill CEO Matt Crisp. That company is going public with Star Peak Corp 2. The ticker is STPC. Matt, welcome to SPACs Attack.
Yeah, welcome. Thanks for having me, guys.
Hey, super excited to have you on. I don't know if you saw us earlier, but we did get comments in the chat saying that they've been super excited to hear that Benson was going to come on. So I'm going to let Chris lead here with some questions, and I'll be back with some of my own.
Perfect. So Matt, SPACs Attack is the name of the show. We try to talk all things SPACs and some de-SPAC companies. One of the first questions we always like to ask is, why the decision for Benson Hill to go public via a SPAC, and was a traditional IPO also considered by your company?
Yeah, we did. We actually looked a couple years ago at whether or not Benson Hill would be a good candidate to be in the public market. And we even back then worked with our board to look at some pre-IPO readiness assessment work and try to understand, okay, what exactly do we need to do to ensure we're ready for the public markets? And then last year, as you guys know, things heated up in the SPAC market. We began to look seriously at that as an option, and we liked it for a couple of reasons. I mean, number one, we saw that there's a partnership that could be created with an organization that had a very aligned sustainability interest, right in the heart of really what we're about as a company. They had taken another company out, STEM, successfully. So having been there and done that was appealing to us. But we also saw it as an opportunity where, we could gain some surety about what valuation we were going into the public markets on, what timetable we would go to the public markets on. And from a capital perspective, of course, it's an attractive, pile of cash that, effectively helps accelerate our mission and our goals as a business. And so we ran through that process late last year, early this year. We ultimately had a lot of options, actually. But we ultimately selected Star Peak Corp 2, STPC. Had a great experience working with these guys, and very excited coming down the stretch here.
Awesome. So before we dive into some of the specific questions about the business, can you just give viewers who aren't familiar with Benson Hill just a brief summary of the company?
Yeah, sure thing. So we're a food technology company. We focus on crop innovation, specifically making better seed. that ultimately makes better food and ingredients. So we use data science, a lot of AI, machine learning, genomic prediction models. We use plant science, so we're actually working in the greenhouses and growth chambers and ultimately in hundreds of different field site locations. And then we use food science. So we test, okay, how does this seed ultimately create a better ingredient? And then we merge those three things together and we can effectively inform, how can we breed for better crops? How can we go back to the very beginning and make a better seed, that leads to crops and ultimately food ingredients that are more sustainable, that are more healthy, nutritious, tastier, less processed, more sustainable. So those are all elements of the value prop that we bring to life.
Awesome. So, it's mentioned by Benson Hill that the company could be a picks and shovel play. And this is why I was so excited to bring you guys on. I wrote an article. So here at Benzinga, we have a phrase coined by our CEO, Jason Raznick, the thing behind the thing, which refers to the companies, that are those picks and shovels plays. So kind of explain to us how you could be the thing behind the thing, in this industry.
Yeah, no, I'm glad you pointed this out. I mean, we're integrated vertically in the value chain, right? So if we can go back to the beginning and we can leverage that natural genetic diversity, and then we can meet our customers where they are, we see that there's this opportunity to supply the entire movement. I mean, plant-based protein and plant-based food and better for you food is irrefutably the fastest growing, most opportune area to deploy capital. But if you look at the options to deploy capital, I think what ends up happening is you see brands like a Beyond Meat, which is a perfect example, company doing really, really well in the public market. But it's I think in some ways the tip of the spear. But then you've got, for every Beyond Meat, you've got dozens of other companies. You got Impossibles, you got some of the big CPGs and medium-sized CPGs that are deploying a lot of capital to this. Our view is, look, I can supply all of these players ingredients that are more sustainable, that are more affordable, which is a super important unlock, we think, to this space, that meet the specs or beat the specs of what they can otherwise obtain. But I don't need to bet on a specific brand. There's going to be some wonderful winners in this category. There's going to be a lot of losers in this category. And what Benson Hill is really bringing to bear is, an integrated, not just technology-driven approach, but an integrated business-driven approach to supply indeed those picks and shovels, right? Specifically around protein, to the entire category.
Yeah, awesome. Love that breakdown again. It's a phrase we love here at Benzinga, the thing behind the thing. So always have to highlight that, when we have companies on and they can fall in that category. So I want to talk a little bit about Crop OS. So, that's the big segment here from Benson Hill, using artificial intelligence to create proprietary food innovations. Can you just talk a little bit about how AI plays such an important role here?
Yeah, sure thing. So, when you think about plant genomics and you think about breeding, we sometimes, many of us didn't know this, 10, 20 years ago. I didn't learn this when I was growing up, but, a plant genome is actually more complex than a human genome. So and if you think about genetics and the A's and C's and T's and G's, these are data. And if we can sequence using, enabling technologies that we have today, sequencing, genotyping, and then we can link that to these outcomes, these phenotypes, these characteristics that these plants represent, what you create is massive data sets. And so what Crop OS is really deployed to do, short for Crop Operating System, is help us understand, down to the genetic, down to the gene level, pathways, how can we breed for better crops in the most efficient way? I mean, it's biology, and biology takes time, right? So how can I run a simulation that looks at millions or tens of millions or billions of potential combinations of these plants, and then really allows us, our team of breeders and technicians and scientists to tap into that natural genetic diversity that's already there and get to market as quickly as possible. So we can cut a pretty significant amount of time by using AI and predictive models. We can cut a pretty significant amount of time out of the product development process and really enable us and our customers to enjoy the benefits of of the natural genetic diversity of plants more efficiently and more expeditiously than we'd otherwise be able to.
Perfect. So Benson Hill also offers plant-to-plate traceability that can help validate sustainability and product benefits to companies. Can you talk a little bit about this segment under the Benson Hill umbrella here?
Yeah, sure thing. So, when you're developing a technology, and CropOS is a powerful integrated technology platform, right, that delivers food innovation. It's not really enough, what we've learned over time, to just have a category defining technological platform. You need to also have an integrated go-to-market approach, right? I mean, this value chain, this agri-food value chain, is largely controlled by really large companies. And so if you're a startup really trying to put together an approach to get to market, you can be at the you can essentially create an approach that makes you that blocks yourself from market. And so what we decided to do a couple of years ago is actually go in an integrated manner to the market to meet our customer where they are, right? I love this graphic that you're showing right now, because this system is really built in a very siloed approach. It's built around cheap calorie production at scale, right? And the end user, the customer, doesn't really have any say or control in what's being produced at the breeder and the seed level. And so what we did a few years ago is we began to make, I think, very thoughtful investments in integrating into that chain, establishing these grower relationships, and then preserving the identity of the crops that we're offering to these growers through the system, so that we can supply a fully traceable solution to the end customers. And because we're bringing this seed that's better from the beginning, this genetic innovation, we can create ingredients that are more whole, that are more protein rich, that can actually disintermediate some of the processing that would typically be required. And then we can go downstream and we can say, hey, look, to a CPG or a Beyond Meat, I've got a fully traceable ingredient solution. It's fully non-GMO, butterfly certified. It's all grown in the United States. Oh, and by the way, not only is it more sustainable and uses less carbon and less water, it's also more affordable. I can offer it to you for a price point that's as good or better than anything you could otherwise get. And that's a big deal. That's a lot of, like I said, that's a nice stack of value prop.
Definitely. I mentioned the thing behind the thing. I do want to talk a little bit about partnerships, right? So there's a slide that highlights, Benson Hill works with Nestle, Blue Buffalo, Bunge, Kroger, Cisco, US Foods. I mean, we're talking some of the biggest food companies and biggest, food grocery companies as well, and some of those retail chains. So how did Benson Hill, land some of these partners, and what do these partner relationships kind of look like?
Yeah, great question. I mean, when we think about this channel integration model and meeting those customers where they are, there's another slide in this deck, which is cool. It talks about the playbook. So getting into the channel and establishing these customer relationships, even when initially we might not have proprietary product to sell them, that's really important. Right, we're garnering the trust of the growers and a closed loop identity preserved production system. We're garnering the feedback and the insights from these customers that we have, some of which are listed on that slide. And then we're using this collective body of information to develop products that, exactly like you're pointing out here in this slide, right, where you go into, in step 2, you're getting that proprietary product into your channel. You're moving this to the customers. And this is where our soy portfolio is right now, that we're super excited about, and especially in the protein realm, because now last year we were on 30,000 acres. This year, our goal was to double that to 60,000 acres. We actually beat that. Our team got 70,000 acres of production this year. That informs 2022 revenue. But in the soy portfolio, that's essentially allowing us to scale in a pretty rapid, manner, the protein and the oil ingredients that we're selling through that channel. And then over time, to your point about partnership, right? over time, we don't need to build all the infrastructure. We need to build enough infrastructure to set the pace of innovation in food. That's part of our mission, but we want to make that broadly available to the market. And so licensing that in the step 3 for broad adoption, is something that, we'll start to do over the course of the next 3 years.
So I heard you mention soy a couple times in there. So we do have, a slide that also shows the pipeline for the company, right? And I'm already getting a couple comments here in the chat, what specific crops are you concentrating on? So if we can talk a little bit about the pipeline, looks like soybean and yellow peas, the big focus for the company. Can you kind of break down, what that pipeline looks like for Benson Hill, for this year and next year and maybe after?
Yeah, sure thing. So you nailed it. I mean, soy and yellow pea. Soy is by far the most prevalent crop used in the alternative plant-based meat and alternative plant-based category generally. Yellow pea is the fastest growing crop that's utilized in that area, really popularized by Beyond Meat, like I mentioned earlier. So those are the 2 big focal points for us. We've got protein ingredients coming from our ultra high protein. We call it UHP soy. We've got first commercial production acres in the ground this year for UHP soy. We're super excited about that. It's the one I alluded to earlier where the nutrition density is so high in the bean in the field that we can actually disintermediate some of the processing that's required. So you get this more whole ingredient that's less processed. It uses a lot less carbon and energy as well as water, as you're producing it and integrating it, formulating it into your food products. But that UHP soy will deliver a tremendous amount of value over the course of the next couple years, and it's a substantial component of the P&L that you'll also see in this deck. But the thing is, and this is why I like this slide here, is we're already selling a portfolio of goods. I mean, last year we did over $100 million of revenue. This year we're projecting to do $127 million of revenue. On a year-to-year basis in 2Q, we reported earnings recently. We saw about a greater than 65% normalized growth rate out of our ingredients division, driven in large part by soy and the growth and the interest we're seeing in products in that category. So it's an exciting pipeline. It's a diverse pipeline that's tackling multiple end markets, and we're seeing really substantial growth and foresee the same in the ingredients category specifically.
So this might be a tougher question since you're the CEO of the company, that huge pipeline. But obviously you stress the importance of soy and yellow pea. But is there anything on that pipeline that you are personally most excited about, maybe in terms of potential for revenue or potential for sustainability? Does any item stand out for you personally on that pipeline?
I'm really excited about what we're doing in yellow pea right now. I mean, we started this program from scratch about 3.5 years ago. We had just announced that we've integrated into the channel in yellow pea, that our breeding program has just delivered amazing results so far. The reason I'm so excited is because today the number one ingredient coming from pea is called PPI, for pea protein isolate. It's an extremely water and energy intensive process. You've got to build these just massive plants. It's a wet process that really, really heavily processes the ingredient. And similar to what we've done in soy, we actually think and are seeing early data to confirm that indeed we can ratchet the protein concentration, the nutrition density up high enough in yellow pea where we can over time also get rid of that processing step. And that to me is a massive unlock, massive opportunity, because you go from a wet process to a dry process, and you're creating something that's really powerful to help accelerate even further this plant-based movement.
Awesome. So, we hear a lot about ESG, right? And we're seeing a trend of, ESG ETFs and, ESG scores for companies. So Benson Hill, could be considered an ESG peer play. Can you talk, about why ESG is so important to you personally and to the company and what that means going forward?
Yeah, I mean, culturally here, it's a very purpose-driven culture, and I think a lot of folks are motivated by, we can call it food security or nutrition security, about environmental. I mean, we've all, animal welfare. Everybody's got different, personal passion, right, around what we're doing and delivering this. I personally, I mean, one of the things I'm most excited about is reducing the cost and increasing the accessibility of products like this. I mean, I love some of the plant-based stuff that's out there today, but I think that it's just too expensive for the common consumer. And I think we're playing a really significant role in helping unlock that and making these types of ingredients and ultimately the food in this category more affordable and accessible. So I'm personally really motivated, excited about that. When you think about ESG, you use this term pure play. If you'd asked me a year ago, what is a pure play ESG? I wouldn't have known. It was only when we were going through this process and we were talking about the products we're developing, and one of the bankers said, well, you're a pure play ESG. And I said, well, I don't even know what that is. And he said, well, it means that if you do well, then it's actually linked directly to ESG. And I said, I guess you're right. We never really thought about it that way, but all the products that we have some environmental or social benefit or both. So we're proud to say that we are, but it's really a part of our identity.
Awesome. Yeah, love hearing the ESG breakdown there. Want to get into financials a little bit. So you had mentioned the licensing side of things, and that really stuck out to me in the presentation. A focus on licensing and royalty revenue. Over 200 patents owned by Benson Hill. So partnership and royalty revenue seen to grow at a compounded annual growth rate of 100% beginning in 2023. Can you just talk, a little bit about how you will get this licensing and royalty revenue stream set up and why it's so important for potential shareholders?
Yeah, it's a great question. I mean, when you think about what it takes to get a product off the ground, and I mentioned earlier how we've got this very deliberate integrated approach, integrated business model. The reason that we're doing that is because we want to establish that initial relationship with the customer, and we want to incentivize broad adoption of the products that we're producing. And we're seeing great receptivity to doing that. We're not beholden to a really large company to be the gatekeeper between us and the customer and the consumer, right? So in this middle stage of growth where we are today, and we're moving proprietary product through that channel, we'll see a pretty significant growth rate, but it'll be around that 30 to 50%, 30 to 60% gross margin level. Over time, though, as we see more and more demand, which we're, frankly, seeing just explode in this plant-based movement, you will transition portions of that growth to more of a partnership or royalty model, whereby we're over time supplying that intellectual property portfolio to some of these other players that are already integrated, that also have customer relationships. And we're seeing interest there, and we're engaging in a lot of conversations. Since we announced this transaction in May, we've had folks approach us from every corner of the industry. The receptivity for what we're doing, the support for what we're doing has been magnificent. But it'll be this sort of medium-term transition where a larger and larger portion of the contribution margin will come from that partnership and royalty model.
Yeah, I love that royalty stream, something we always focus on. So had revenue 102 million in 2020, overall compounded annual revenue growth of 46% from 2020 to 2027 is the estimate given in that presentation. Outside of the royalty and the partnership revenue, how will the company achieve these financial goals?
Well, frankly, right now we're supply constrained. So we're putting capital to work to grow more acres, to expand our production capabilities, to further invest in our supply chain. We're looking at opportunities to do that internationally as well. And so right now, I'd say that given the incredible growth rate that's seen in the space, And the fact that we're in our financials accounting to or projecting to take, frankly, a very small, very small portion of the total market over time. I really feel like, the demand side is there. We just need to do our jobs, execute our plans, and deliver product to the people who care. And there seem to be a lot of them.
Awesome. Yeah, I love that. Matt, we've got some great questions here from the chat. I got through all my questions, but Mitch, what do you think? Should we get to some question here from our loyal viewers?
Yeah, they're going crazy. They want some answers.
I love it.
That's what we came here for. So I'll let you go with the first one here. I think it was from Solar Up, Chris.
Yep. So Solar Up, who has been asking for Benson Hill to come on our show, a loyal viewer here. So Solar Up asked, could Matt explain the farming aspect of the company? Does Benson Hill own actual farms, or does it pay farms to harvest specific yields? Can you just talk a little bit about the farming partnerships and relationships here?
Yeah, absolutely. So we've got a terrific network of farmers. We don't own the farms on which we're growing the soybean or these yellow peas, but we're partners with farmers. So, we think about, I think the traditional ag model sees the farmer as a customer, and everything's geared towards yield. I just need to sell more seed so that the farmer can yield more, so that more can dump into the commodity system. What we're doing is we're establishing a relationship with the farmer, and we're saying, look, let's partner together and let me help you realize value past the farm gate, because the consumer's demanding what you can produce. If we can maintain the integrity of that product, the identity of that product, separate and apart from the commodity chain. So what we do is we go to a farmer, and if they are willing to share their data with us and collaborate with us, we're often looking for folks who are executing regenerative agriculture practices in their growing operations. They know how to grow non-GMO. And we're saying we'll pay you a premium above and beyond what you would obtain in a commodity market, and we'll buy everything you can produce. Right? We can ensure the agronomic integrity of what it is we're going to supply you. We can show you all the data. We're very transparent in that relationship. And so what we end up getting are very forward-thinking, very innovative farmers who are just eager to participate in these areas of the agri-food value chain that are really exciting and that can supply more value back to their farm.
Excellent question and even better answer, may I say. Now let's go ahead and let's get to another one here. Juggernaut asking, why would they switch to your product? So I'm guessing competitive advantage here. So why would partners try to partner with you guys instead of another partner?
Sure. Now it's. I mean, the number one reason that you go and you have a conversation with a consumer packaged good company is cost. It gets me in the door, right? Hey, I can offer this to you for less than you pay. But then when you unpack it further, we're getting a lot of questions about. I mean, this is especially in the COVID era, right? What's your supply chain? Is this domestically produced? Because they before were getting stuff that might have been from overseas, and I can say, look. Everything I'm producing for you is non-GMO certified. It's all produced in the United States. It's all fully traceable. If you want to go meet the farmer who produced it, I'm happy to introduce you, right? We can take you all the way back in the chain. And then, by the way, we've run life cycle analysis that says, here is the carbon savings and the water savings versus what you otherwise would have purchased, which is, again, becoming very important to the consumer and to the consumer and to the company serving the consumer. And then again, I'm just wrap back to affordability, right? I mean, if we can meet the spec, it's more affordable and it has all these other value props, then that's, it could be one or many of those reasons why they're switching.
Yeah, I'm all about the story. I mean, you're telling it how it is there, cost first, but really after that, it really becomes a matter of what we want to be moving to, right? And so I love that it's fully traceable. That definitely helps us. And there's one thing that we definitely want to know is where our food is coming from. This exactly solves that issue. All right, Chris, what's the next one we got in chat?
Yeah, I mean, we got to ask another question from Solar Up here. Again, since Solar Up really wanted to hear from Benson Hill. So a question here about Crop OS. So is Crop OS operate a similar app store manner as Ginkgo Bioworks? How does CropOS work for partners in that term there?
Sure. So CropOS is principally used by Benson Hill. What we do when we have partners come in and we want to co-develop a product opportunity is we're giving them a tour of the system, right? It's a tour of these wonderful facilities we're in. There's some videos of that on our website too, but there's also a tour of CropOS, and there's also some good material on our website around that. And we're saying, look, here are the ways that this technology platform can add value. And we've got nearly 150 people here that are dedicated to data science and plant science and food science. And so there's a lot of appeal to partner with Benson Hill in order to access CropOS. It's not as though they need a user interface. They're really collaborating with us to inform what it is that the activities are, that the product development path is. And that's, it's a more scalable solution in that manner, and we've seen a really great receptivity to that approach.
Awesome. Matt, thanks, for answering these viewer questions. That's something we always love doing on the show here. And thanks to our chat for those great questions again. So again, joining us on SPACs Attack today, Benson Hill CEO, Matt Crisp. That company is going public by a SPAC merger with Star Peak Corp 2. The ticker is STPC. And Matt, there is a merger vote coming up this month. Can you remind everyone when that vote will be held for STPC shares?
Sure, it's on September 28th. So we're in the red zone here.
Getting close to getting that deal done. Well, Matt, thanks again for joining us on SPACs Attack and taking time out of your busy day. We look forward to following the progress and seeing that vote get done.
Terrific. Thanks again for having me, guys. Take care.
Thank you. Awesome. Well, you guys heard it. Another exclusive interview here on SPACs Attack. And Mitch, I told Matt, and I say it again, I always like doing these thing behind the thing companies. Ever since I heard, our CEO, Jason Raznick, really mention that term. We talked to MP Materials before as a thing behind the thing, a pick and shovel play. I like that segment of industries, right? Anytime you can be the company that partners with others. And Mitch, you heard Matt say, right, that there's going to be some winners, there's going to be some losers in the industry. They can partner with everyone and win in this growth industry. I really liked that comment from him.
Yeah, one of the things that I love about this is that when you look at different companies and you compare them to, let's say here, public market references brought to you by their investor presentation, you can see companies like Beyond Meat, App Harvest, Aero Farms, but really these all come down to the overall of what Benson's trying to create. I think they're definitely in the right area. And then one thing just to I want to point out is that their future EBITDA sales here, EV to EBITDA is only 6 times. 2023 EV to sales is only 5 times X. That's exactly what you want to be seeing. One thing that we've been worrying about is valuation, right? And so did the acquisition company overpay for a company like this? When I look at valuations like that, it definitely shows me that this is going to kind of be a value play within itself. And so if it's a value play with growth, I definitely want to be a part of it.
Yeah, definitely. As Solar and so many others in the chat, I also was looking forward to having this interview, to hear more, right? We've talked about plant-based food before, Mitch, a tattooed chef or a company like that. And again, I don't know as much about that industry, right? But I know it's growing and that there is demand for plant-based food products. So I enjoyed this one.
Yeah, definitely. It looks like we got a lot of thumbs up and support for Benson Hill in the chat. This is what it's all about, getting you guys the interviews that you guys want out there. So let us know if you guys want another SPAC. You got someone looking out. I'm sure Zoltan will definitely go ahead and reach out, make it happen right here on SPACs Attack. Like always, definitely smash the thumbs up. Let's see where we're at on the likes. I want to get some likes up. Let's get that going. Let's go ahead and I'm going to pull up my watch list, see what we got moving out there before we wrap it up. We got about 9 minutes left here. Looking like we got Rocket Labs leading me right now, but let me know, Chris, do you have anything out there that you're paying attention to right now?
I mean, that watch list has changed quite a bit since before the show, because I had a couple names written down and now I don't even see them towards the top. But yeah, Rocket Labs, Clever Leaves, Vintage Wine, VWE, I'm seeing up 3.5%. That one's slowly creeping up there. I like that company. Again, wine is a segment that's not going away, right? And they're one of only two pure play wine publicly traded companies. And they trade at a much cheaper valuation than their pure play competitor. So I like that one, and I've been watching that one, VWE.
VWE, there you go. That's the ticker. I lost the ticker. I remember when it changed over, but look at that move. Nice.
Look at that move. Look at that green there.
Nice daily candles there. Let's go ahead and take a look at Clever Leaves. Looks like it's getting a lift. Could have been maybe that Maps upgrade, but I'm not sure if you're seeing any news on Clever. Have you seen anything today?
I did see. Look. Oh, you know what? I did see in Benzinga Pro. It looks like they're having a presentation tomorrow, September 9th. So maybe there's some anticipation that, they'll talk about, some new items. But Mitch, I think you're spot on that this could be a weed map sympathy play, right? There's not a ton of cannabis companies that trade on the major exchanges, right? A lot of them are still OTC, and not everyone can, buy OTC stocks, right? Depending on your broker. So I think Maps and Clever Leaves, are two of the ways to get exposure to that segment via a major exchange.
Like always, we definitely enjoy our loyal listeners. Let's go ahead and let's take a look here at Rover. Rover's getting on up there towards 14 today, turning back a little bit now, down towards 1367, but this one's not looking too bad. I'm glad I've been calling this one out recently, and this one's really starting to make a move on up there. Let's see if it can get back above 15. That would be interesting to see.
Yeah, I mean, Rover looks strong today. I think this watch list is starting to go the opposite direction. We only have a couple 5% up movers and a couple in the 1 to 2%. But otherwise, I'm seeing the red already on your watch list there, Mitch, at the bottom. So we definitely have more names in the red today than the green. Let's scroll down. Yeah, I saw Catapult. KPLT was in the red, double digits. That's one that's moved the past couple days, right? So this could be a reaction to that huge price increase, right? We saw shares get that lift. It's a firm sympathy play, a buy now, pay later. We did get acquisition news from PayPal today, right? They acquired, was it a Japanese buy now, pay later company, I think? So could Catapult be a buyout candidate, from a larger fintech company? That's something to watch as well, rather than these companies building out their own infrastructure.
Interesting one that made a big move on up, but then big move right back down is Skills getting drilled down here, down towards 1162. The question is, it did do a gap fill right here on the second. Then when we filled it again, it looks like we're breaking down below that. What are you thinking about Skills? I'm kind of glad I didn't get in it. I'll be honest. I almost had a little FOMO on that pop. It happens to the best of us.
Mitch, what did we say with Genie, right? The NFL season starts when? Tomorrow. What was the big catalyst that was coming for Skills? They were launching an NFL mobile game where they had a contest, right, for someone to develop that. Well, the season's about to start. Where is that game at? How much are they missing by not putting this out already?
Where's the game, man?
I mean, wouldn't you want to release it now? Like, I don't know. That's just me, but
I agree with you. I mean, it wasn't like the competition was done in, let's say, last month. I think it was done in March.
Yeah.
So where's the game?
Maybe they'll surprise us. Maybe it's tomorrow morning, ahead of that Dak and Tom Brady matchup. Skills says, hey, here's our new NFL game, and shares rocket, right? I mean, it is a catalyst still for shares, right? Whenever they announce that NFL game, I think we're going to see more interest in this company. But with that being said, the further we get into the NFL season without this game, I just think is a missed opportunity. So again, that's what I'm looking for as far as the story with Skills.
Yeah, it's going to be an interesting one. I wonder if this one can get back down below $10. I've always talked about it. I think since it was up at $20, I've been saying it to Chris. One day I'll get this one. I just don't think it is right now. As you guys can see, this one went up to 44. It's been in a downtrend since, and so this is why it's important to try to maybe get at that green monthly candle versus trying to jump in before that candle's really green. This one giving you that kind of sign that it's still in the red. So just be careful. We'll look for this to come back and see if skills can come ripping. One last one on the downside I'd point out is Mile. Mile did get a small bounce, but this is why I also want to tell you guys, just be careful because these little bounces doesn't mean that you just load the boat into, because you can see it pulled back right back to it. So you want to see it kind of clear levels. This was a big gap to fill here from 550 to $7, and it didn't even come close to it. It turned around. We'll see if it can get back up above 5, but for right now, Mile looks like it's trying to head down.
Yeah, definitely. Mitch, how about SEAH, right? So they're bringing Supergroup public. Shares are at $10. This one traded under 10 for a while, but it looks like maybe going into NFL and a strong sports calendar. That I kind of called this out not too long ago. That SEAH and AUS, the two that have deals for sports betting that haven't de-SPAC'd yet, could get interesting once they complete that merger. So I'm looking at SEAH here. I do think it really needs to complete that merger, but I think the NFL season could be a catalyst for this company.
I definitely do think too. And one of the things that you clearly see is a nice defined bottom at near 985. I would actually like to see this one pull back a little bit, come closer towards the 990s, then turn right back around through the $10. If we do that, this one definitely looks like on the bullish side. You guys know I've actually been long SEAH and multiple times. I haven't taken a profit in this name, so I'm wondering when it's going to turn around. I always loved the management team. I mean, that's why I talked about SEH for such a long time. And the management team is doing what they were supposed to do, getting the partnerships and deals that we expect for them. Now let's pay attention to see when we get a nice big deal. Like, when's the next big deal and when does the turnover happen? I think that's what you need for SEAH. It's definitely on my radar, but we'll see if it gets the volume to make the move.
Definitely. Well, Mitch, it looks like time is nearing the end of the show here, SPACs Attack. I mean, it was great to see you in the office. Great to have, another exciting show. We got through headlines. I really liked the interview today, right? Hearing from a company that not many people know about, and then also getting to the watch list here at the end. A lot of different ideas here for people in our chat, some names that we are watching. Anything else to add, Mitch, from today's show?
No, that's going to be it for right now. I mean, I will tell you guys that I'm still in Genie, looking to get into some other SPACs now that we're starting to get into this area where I feel we could have another wave. One of the things is always it's talked about, summer brings a little bit of a slow period, right? When we were going into summer, we started getting that slowdown. I think we got it a little bit early, so I'm looking to see if we get the ramp up early also. I'm looking to see if we get another wave in the SPAC industry overall. So what do we need from this? We would want to see lowering supply, like Chris talks about constantly. We don't want to see more SPACs coming out and out and out, because what we need is for the SPACs that already came out, that wave, to all of a sudden start doing great. And then seeing that most of the ones that announce start popping also. That's what we need to look for. We're going to see if we get that pattern. I know Chris and I will be looking out for it. And there's always waves to this game. So just because we're on that down wave in certain areas doesn't mean that the up wave can't all of a sudden start. And I definitely want to be ready for that when that happens. We'll be here on SPACs Attack trying to get you guys on that timing. Of course, we're not perfect, but one thing we can do is that Chris and I are going to look at this market every single day to try to notice the patterns that you guys need out there.
Definitely. Well, thanks everyone for tuning in, and thanks again for all those great questions and comments during the interview. It's much appreciated, and we will have more interviews later this week, so stay tuned. SPACs Attack.
All right, up next on the Power Hour, we're going to also have a ticker HOTH interview. We also got we got Zach and Josh. You guys stick around. We got some traders that are going to talk some hot stocks on Power Hour, like always. I'm thinking we might have hot stock Luke's, and I might have to change up my area. Spencer's desk is getting a little bit crammy. I might have to move it up, dance around a little bit, get the party going. You guys head over to the Power Hour. We're going to continue the show. You guys hit the thumbs up, hit that share. Let's turn up the stocks, turn up the volume, and get towards the Power Hour. We'll see you guys next time on SPACs Attack. Like always, guys, stick around. We got some great interviews coming up. We got Moneyline tomorrow. Is that true, Chris?
That's true. Moneyline, and they're out with some updated guidance for the company. So super excited to hear from them tomorrow.
Smash that like up. We'll see you guys next time on the SPACs Attack.